Let's take a look at those results from Explosives Group AECI right now. Full year headline earnings per share climbed 25%, that's to 720 cents, while revenue grew by some 16% to 13.3 billion rand. This as volumes showed growth of 7%, where the chemicals and explosives company benefited from a weaker rand. Graeme Edwards, CEO of AECI, joins us now to unpack the results. Graeme, thanks very much for your time. Looking at the fact that we saw volatile commodities, volatile currencies, labour strikes, heavy rainfall, which affected that open cast mining. This is not a bad set of results in a tough trading environment.
We're very pleased with them, and they certainly surprised us on the upside. I think a lot of the real growth came really in the last part of the year. If you look at the rand, it was sort of at about, around about 7 rand for the first 3 quarters of the year. Then it weakened in the last quarter to above 8 rand, and that really gave us a lift at the end of the period.
One of the key focuses in your outlook statement is obviously that you are seeing traction in mining and manufacturing. However, it's volatile, and that points to the fragility of the situation. How concerned are you?
Well, it is a concern, and you can see it in our working capital numbers. You can see the stocks. It's very difficult to run a business when even month to month there's volatility and you're never sure whether you're starting another trend. So it is a worry, but having said that, we're exposed to the volumes in the mines, and longer term, or in the medium term, the volumes are not as volatile as pricing. So, we're not exposed to like the platinum price or the copper price. We're exposed to volumes. So in the medium term, we do expect reasonably sort of stable growth based on the number of mines going in and the things that we see. The manufacturing sector is the one that does get scary, especially when the rand gets strong, because then a lot of the people really downsize quite significantly in that process.
And the capex you've put in, and it's been quite extensive. You happy with the return you're making that? Is it all up and going now?
Yeah, it was about 2 billion. About 3/4 of it is up and going. Okay. And some of the return is coming through. We've seen the groups, starting to return to creating shareholder value.
Yeah,
in other words, the return has gone up a bit. But there's still more to come. So the detonator plant hasn't been fully ramped up yet. The ISAP plant, that's still got some more to come next year. And even the mining chemicals plants, which was the other part of that big capex, that's still going to still come through for us next year. This year.
But so we'll see it in this financial result.
This financial year.
Just in line with the question that Wayne asked, do you have a number in mind in terms of return on capital that you hope to hit, and margins maybe that you hope to hit?
Yeah, in our business, you've got to have a trading profit to sales above 10%. We're at 9.8 now. We're not quite there, but we're getting there. I'd like to see that in the 11 to 12% range. Okay. We're looking for a return on invested capital of ideally around about 18%. Okay. Our weighted average cost of capital is like 12.8.
Well, that's very good.
Yeah.
A big focus, sorry Wayne, a big focus for 2012 is the AL mining in the rest of Africa. Yeah. What traction are you seeing on that front, and how difficult is it really to do business in Africa?
Look, luckily for us, we deal with blue chip companies in Africa, so we've followed our customers up into the rest of Africa. The real growth areas are the DRC and Zambia, and we're seeing that's obviously copper and cobalt. I was up there about 3 months ago, and you're just seeing these mines coming online, and they're just doubling in size. It really is moving ahead. So that's been a big driver of growth. But really the one that performed well for us was West Africa, our open cast gold mining. It's not just Ghana, there's Mali, there's Burkina Faso, there's Guinea. So there's a lot of countries that are really moving forward there. And of course, we're seeing now coal starting to be mined in Mozambique. And that's going to be a kicker for the future.
And are the South African miners just pushing volume through the same infrastructure, or are they actually spending on infrastructure? What's the feeling you get?
Yeah, certainly. Look, if you look at gold mining, for example, if you're talking South Africa specifically, the gold mining is obviously declining in real terms year after year after year. The guys are running their assets as best they can. The only new mine is South Deep. That's the only one that's come on. Platinum, we see the same sort of the platinum industry for us isn't expanding at the moment. But in general terms, the mining goes down in kind of step changes, because once you've got a mine, you've got to run it flat out until you stop, until it's not cash positive, then you stop. So you tend to find it goes down in kind of steps. At the moment, you're finding people running what they've got.
Okay.
Graeme, this is something controversial, if I may just warn you. This is a great result, by the way. This is about as best as I've ever seen.
Thanks for warning me as well. Yeah. I'm waiting with bated breath to see this controversial issue you're going to bring forward.
The analyst society, so investors, fund managers, and analysts, used to beat a path to his door and put pressure on him to separate the explosives business, the chemicals business, and the land.
Yep.
they used to ask, how do these three hang together? Please put a common thread through this. And they asked you to list them separately, sell the land, and you refused and you refused. Does this result vindicate you?
I think it does in a way, but I mean, ideally we would love to separate the land. Let me be honest, we keep looking for other business models. The issue is about creating shareholder value.
Yeah.
And until we are convinced in our minds that the sum of the two share prices would be bigger than the current share price, we wouldn't do it. Now the truth is a lot of our shareholders do put a value on our land. They have a value in their mind. A lot of our shareholders are long-term shareholders. They're waiting for that next property boom that you were talking about. And so, you know, you can't just give that land away. You can't split the share and let that share price go down. But I can assure you we are continually looking at different business models. My view is explosives and chemicals do stick together. There's a lot of synergy, especially on the mining side, but certainly we would really like a model which separated the land out.
Okay, look, can I put something controversial in? Having run Dimension Data's investor relations department for 3 years, I say to those analysts, it's very easy to run a business on paper.
Yes.
Yeah.
Anyway, I've got your back on. I've got your back on this one, Graeme.
Obviously, you were in the right job there.
I was obviously in the right job. Right, Graeme, just in terms of the biggest challenge for you as 2012 obviously looms large, we're already midway through February. You have pointed out that it is the volatility in the mining and the manufacturing, perhaps the lack of visibility. Is there anything else that concerns you?
Yeah, there's two main issues. Look, the one issue is we're busy doing the final ramp up of the detonator plant, and that has to ramp up this year, and we have to get the value out of that.
Now that's ISAP that you refer to.
So that's the ISAP project, and really that's going to be a focused effort. It's got to achieve its rated output, and the value has to flow through. But then if you look at the rest of AECI, our gearing's down, you know, the rest of the projects have come through. We're really now looking at growth opportunities. So the challenge for this year is the expansion. If you look at our chemicals business, it's actually not that easy to expand in South Africa anymore, basically because we're in a lot of the industries, and the Competition Commission doesn't allow us to, you know, to acquire more businesses here. So the challenge is going to be moving that model offshore, and the area that we're really looking at the moment is Brazil. It's still relatively early days, but that's certainly going to be our next challenge.